Hey, it's Chris Baker, the Moneymaker here in sunny Orlando, Florida. I just wanted to kind of share a little bit about what is happening in our marketplace. We just got our numbers for January, and it's our first data to indicate what is the market doing in 2025. And so I wanted to share a little bit about and kind of give you my thought process around some of the numbers to kind of see, so you can kind of differentiate what's happening in the marketplace, okay? So one important aspect to know is that values are still strong. Values are up, went up 17.4%. The average price was up 17.4% in the month of January from last January, okay? So that's a strong indication that our values are still strong. They're even up 6.1% from the last month. And so sometimes in January we see a little dip off, but we're not seeing that as far as this year goes, as far as value goes. What we are seeing though is increased inventory. So sales are down. Sales are down roughly 11.9%. There's 1,514 homes that sold in the month of January. And so we're seeing sales going down. They're actually down 29% from December of the year. And so, and that's, I would say, fairly normal in a sense that we see a drop off in January coming back from the holiday months. And so I wouldn't take too worried about that. One of the things I think I'm getting a little bit more concerned in is that we're starting to see more days on the market and our inventory has gone up significantly. All right. And so when we look at inventory this year, there's 11,670 homes that are on the market as of January. That is up 42.4% from last year. Okay. So 42.4%. So that is a pretty significant increase in the amount of inventory that we saw from the previous year. Also, inventory was up 16.4% from December. So we're going to see a little bit more homes come on the market as the new year comes on. So I would say that's somewhat of a concern. The real concern, really, where I saw probably the most significant increase was on days on market was up 17 days, which is around 30% days on market from last year, okay? And so that's indicating that we're transitioning into what we call a buyer's market. And so our month of supply are also up at 7.78 months of supply. So during COVID, we were less than 1 month supply of homes for about a 15-month period. Now we're at 7.78 months of supply. And so this is one of the things as what we're looking at is happening is that we're transitioning to a buyer's market and we're starting the new year in a buyer's market. What we think about a balanced market is when we have 6 months supply of homes. That's what we call a relatively balanced market. Now we're at 7.78. And so what does that mean to the consumer? And what does that mean if you're a buyer? And what does that mean if I'm a seller? If I'm a buyer, that means there's more opportunity to maybe negotiate and get a fair, get some opportunity. So you might be able to get a little bit of money off of the purchase price. In addition, you might be able to get some closing costs included in the transaction and get more favorable terms. Because kind of sellers are going to be starting to look into basically competing over the buyers that are actually out there in the marketplace. Now, if I'm a seller, should you be concerned? I would say you should be concerned, but it doesn't mean you can't sell your home. What's selling in the marketplace now is that homes need to be in good condition. They need to be priced right. So you can't no longer just say, hey, I'm going to hope and wish my house is going to get top dollar and I can't be stuck on my price, right? You need to price your home competitively and based on how the market's trending, all right? And so you don't want to be chasing the market. When you chase the market, you make less money than what it deserves. And so you need to be priced competitively. And I always tell my sellers, you're going to know within the first couple of weeks of your house being on the market if it is priced competitively or not, because you'll get the showings that you need. If you don't get a whole lot of showings, that means you're not priced right, because there's enough buyers that are actually in the marketplace right now. The rate is the rate. We're not expecting the rate to kind of go down dramatically at all unless something happens in the market that wouldn't be good for everybody. So just keep that in mind. And so our rates are our rates. We're going to be in the sixes. I just came back from our national convention. We call it Family Reunion in Las Vegas this year. And our CEO really talked about how the market trends with inflation is pretty much controlled right now. We're seeing also the GDP is strong. It's in that area where it kind of needs to be. And so with those indicators in the marketplace, we're not going to see those dramatic increases or reduction in interest rates, because usually they use the interest rates to stimulate the market. And so we're not seeing that. So it is what it is ultimately what I'm saying, okay? And so if you're a buyer, look for some opportunities. If you're a seller, just make sure you price the home right, have it staged, have it in the best condition possible, and then you'll have the right buyers fighting over your home, all right? So this is Chris Baker, the Moneymaker, just giving you your January update. If you have any additional questions, feel free to text me or shoot me a comment. Love to answer, love to help you reach your real estate goals in 2025.